Hello and welcome. I did a video earlier tonight regarding Bitcoin against the US dollar and how it does amongst certain situations. And if you want to see more about it, I recommend watching that video first before watching this one. And this one will indicate the same statistics within Litecoin. And these numbers are a little bit different, but this one here, triple O's, it's doing good in Litecoin as well. These are the Litecoin statistics. So when it is in triple O, when it's above all of its moving averages, it's up 1% a day on average, crushing all of the other numbers, with the runner-up being, well, that's where Bitcoin was its worst performer. This is the second best one here. Bigger difference. Also, the worst one here, 1.14% down, yet only a 27 sample size compared to all the other ones. I double-checked this one in here. Sure enough, hasn't been many situations, only 27 days when it was above the short-term and long-term average and under the mid-term average, and of course, the success rate is just terrible. However, it's great amongst this. Also notice how many days Litecoin has spent under all of its moving averages. Quite a few. This is since 2015, because when I received the data, this is the stuff I was looking at. So all of this nonsense stuff in here, and definitely I want to go past this day. So I noticed that it settled in, but look at all this time in here. These are the majority of its days below those averages. That's why it's so high in this case. And if you want to get good data within a simple strategy, you oftentimes will need large sample sizes, which really for the most part within codes is really only easiest to be doing with a half hour, 30-minute, 1 hour, and 15-minute kind of time frames. However, that's when the data starts within this experiment. Now what I want to focus on is this column here. When the situation has had 1% up days. What if someone decided, okay, what if you bought the day that price action enters this phase? So basically, it gets above all of the moving averages, it finally gets over the long term, or it finally gets over the whichever ones. If it enters it and you go long, and you stay long as it's in the setup, how would you do? So basically, you'd stay long until it crosses below well, in this case, it'd be the 7-day average. But I would have to also presume that I'm using the 7, the 21, and the 63. I could, if you did like the 10, 30, and 90, okay, you probably get similar kind of results to the same experiment as well. So this is what we have. We have the date in column B, the entry price that you would be buying. You were looking at the closes, and the exit price, the amount of days in which was spent within such. I'm just going to put this in a centering format. Actually, that looks fine. All right then, so we see 75.94, you buy, you get out 70.82 after 9 days. That's a losing trade. You buy back at 74.78, and then you sell for a small loss the very next day. Here's a spot for 5 days. You go in at 76.88, and you sell for a small loss at 76.59. June the 11th, you get in at 0078, and you sell at 0.011. after 12 days of entering in. Now this one was very interesting here. It's the only one that I gave an asterisk to. June, although a couple were close that I could have, but I didn't. June the 27th, 2015, an entry price of a single, or basically 12.38 handle, selling at 15.18, but the day before it closed at 28.61. When I was looking at the data, I did not have data visually for the high and the low price, only the closes for this particular experiment. I know I could program it within such. So the way I'd be thinking here is, obviously, if you're trading live within the market, if you got in at 12.38, price action does better than double, and all you get's about a 20% gain, there's something wrong. Although there are going to be times in here where you would have stopped out and never exited out. Like, for example, say you entered this day at 78, and maybe the next day you would have got stopped out but recovered within. There's so many different reasons it could change things, but generally speaking, that was just a rare spot. So we see a lot of situations in here where what's going to happen is you're going to go in and you're going to have a small loss. 1733 in, 1600 out. 1544 in, 28 out. Small loss. And then here, in this situation here, this was actually a pretty big win. Even though you bought 1544 and sold at the 28 handle, you waited over 2 months to buy back, as it was August the 17th compared to October the 29th. And after selling at 1528, you got back in at 1238. You sold at a decent loss at 1162. But then a few months later, little over 3, you got back in at 008. So there's a much cheaper price. But there's also 4 consecutive times you're in, you're out, you're in, you're out. That's what's going to happen on several times. I'm not going to show too much of the data for each of these, but this does a wonderful job in having a lot of small losses but more big wins. And it does a tremendous job in not going through any major losses, and thus, when the major losses occur, getting back in at a much cheaper price. Because even all these times in here, in 2016, small loss here, then you buy back more expensive for a small gain, then you buy back more expensive for a small or okay size loss, then you buy back more expensive for another small loss, then you get a much cheaper price and a small loss. Buy back a little more expensive here, small loss. Buy back much cheaper, really, 65 to 50. That's a decent amount, small loss. And then here and here, small loss. Here and here, small win. Buy back in when it's a little more expensive, decent size gain, going from the 41 handle to the 77, staying for 11 days. But here's a situation of very interesting note. You got out at the 77, but then you got back in at 96. And then, of course, there was the rally that just took place, the big phenomenal one. This is on December the 9th. Big gains. So what I want to do is show you a chart, how you would be doing trading this. I'm going to show you how the chart would look with the rake, and I'm going to use the Bittrex commission of 0.25% per trade. And I'm going to do it without any rake, just what the price would be if you had rake free. So here's the chart. This is the amount of trades you would got in and out of, 43. You obviously have done very well in outperforming the market. You start with, this is a case starting with 1 Bitcoin. So just in and out of this, basically all in bets. Just playing this code, you would go from 1 Bitcoin, and now you're pretty much worth about 7 Bitcoins. You would currently be out of the market right now. And this is what it would be if you had paid on Bittrex. So you'd have 5.5 instead. And in turn, throughout the entire time, you would have both obviously outperformed Bitcoin, but you also would have outperformed Litecoin as well during this situation. But here's a spot from period number like 5, 6 all the way down to 25 where you grinded your way lower. Seemed like every single trade was a loser. And you ended up losing 1/3 of your portfolio during this entire time. Now, in the sells in the 30s, didn't go down quite so much, but you make up for it when you get on any of these tremendous gains, because we have one tremendous one here, tremendous one here, another one in here, and of course the granddaddy of the one recent ones that have been played, and then another decent one again just most recently. Let's look back at the data from basically row 6 through 25. And it all would have started on July 28th, 2015, going on to about March 29th, 2017. So there was enduring 2 consecutive years of trying to outperform the Bitcoin and Litecoin market and not doing that great of a job. Thank you for tuning in and have yourself a great day. Bye-bye.